all that jazz.
Oh, Lord.
You ready?
Yep.
Here we go. 5, 4, 3.
What's up, guys? It's Mark Jones, your host of Key Factors Podcast, branch manager of Directions Home Loan at Cantera here in San Antonio, and co-founder of ReviewMyMortgage.com, largest index of mortgage programs nationally. And we're going to be providing you guys with a daily update on key topics within the mortgage and real estate industry, in addition to the daily mortgage average rate, and some top stories that are going around each morning, hopefully about a 5 to 10 minute segment, this being the first one that I'd like to kick off with the national average of what rates are today conventionally. We have risen to 3.7%. That means that if you are currently on the fence in regards to refinancing your home, you may or may not have missed your opportunity. So get with your preferred lender to check out your options ASAP, because they are predicting to not stop. If you are on the fence about purchasing, now is the time to get more for your money before they go up too far. This is something that in our industry is cyclical. And this time around, we're not sure how long it's going to take for it to come back. It had, I guess, the lowest rates we saw historically came in way of 2012, then again in about 2016, and then again recently in the most 2 years due to the pandemic. And unfortunately, if we knew what rates were going to do, none of us would probably be doing what we're currently doing right now. So that being said, I want to jump into the first story that I want to bring to you guys, which is, as Omicron surges, some major lenders are quiet about the safety measures. And this is brought to you by Maria Volkova, which is on the housingwire.com. Housingwire.com is one of the resources that you can use to get mortgage news updates. I'll be using them as a resource and many other trusted sources, but I wanted to read briefly from this article. So during the onset of COVID-19 in 2020, mortgage lenders were eager to discuss the measures that they were putting in place to keep employees safe. 2 years later, as Omicron variant surges, some lenders have very little to say. Of the top 10 non-bank lenders that HousingWire reached out to, only 6 provided any updates on how they are dealing with the surge of Omicron variant. Rocket Mortgage, Loan Depot, Guaranteed Rate, and Freedom Mortgage all either declined to comment or did not respond to the question. California-based PennyMac said that they are following the state mandates but wouldn't elaborate further. For lenders that didn't respond, the most common response is they allow their employees to work from home, whether it be full-time or on a hybrid basis. And both HomePoint and Fairway Independent Mortgage have kept most of their employees at home since the onset of the pandemic starting in March of 2020. And according to the spokesperson for HomePoint, 95% of employees work remotely. I'd like to add to that I believe that that's a wonderful thing, that within our industry, we are adapting and becoming more efficient with our customers, allowing the process to kind of take place on their own terms by the use of Zoom and virtual meetings, sharing screen to educate our customers on what their options are. Instead of having to just talk over the phone, people are becoming more comfortable and confident in the use of internet and virtual chat rooms and things of that nature, the tools. In addition to that, it allows the operations personnel that we employ by way of generating mortgage volume and purchase and refinance transactions. It allows them the opportunity to continue to grow and hit milestones in their career, all while working from home. I can tell you personally that most of our branch here within San Antonio, even though there are no mandates, do actually work from home. And when they do come to the office, it's actually in a shift. So that being said, I believe that I've heard some feedback from my employees that it's a great thing. It allows them to actually get more work done in most cases because they don't have distractions of other colleagues around. But they do miss the interaction of having the culture of in-office experience. But the mortgage business will go on. So that's a pretty good story or topic to discuss. And the final one that I wanted to bring up to you guys, which comes from National Mortgage News. It was written by Bonnie Seenock, and this was just published this morning. And the topic is how lenders are using TikTok to reach Gen Z mortgage borrowers. I'm going to read briefly from this, and then I'll give a quick overview of my thoughts. Short one-person videos on social media channels like TikTok are heavily associated with the generation of emerging homebuyers born after 1996. And small but growing group of mortgage influencers are cooking up content in the format in order to reach them. Leading creators with mortgage-related handles have cultivated thousands of followers and millions of likes on TikTok and platforms on which 60% of the users are Gen Zers. And I believe this is a bigger topic than what the article is kind of depicting here, which is something that has been happening over the last, let's say, 10 years in our industry, has to do with social media and connecting with the generation that is using them. Essentially, we've got to go where the home buyers are, where the refinancers are, to educate them. And I believe that if you're not on the line, it's going to be tough to find you because most consumers these days are not only finding their lender, their realtor, and their home online. So if you are not engaging in social media, some form of social media, YouTube, something along those lines, then I would say that you're behind. So find your topic, get used to it, and start putting content out there. I had a episode recently with a property wholesaler whose, in my opinion, the best comment advice came in way of, all you got to do is press record. So that being said, I believe that our industry has changed. It's becoming more efficient. It's becoming more virtual. It's becoming more in your face. And you've got to find a way to make mortgage sexy. Unfortunately, mortgage is not. Real estate is the sexy part of what we do. And most of those are found online these days. Luckily, with ReviewMyMortgage.com, it is allowing customers to go put in their criteria such as credit score, down payment, area, and the actual program will allow you to see what types of different programs you can actually qualify for within your territory based on the criteria you enter. What this does is it allows that consumer to be a little bit more educated when they do actually speak to that mortgage professional or realtor when the time comes. So in closing, I believe that rates are going to continue to rise. So if you're on the fence, get off that fence, get in contact with your mortgage professional to get your options ASAP. I believe that you've got to become adaptive, and this market is definitely one that needs adapting. Working from home, utilizing social media, these are all things that are coming and have already occurred within our industry. So that being said, guys, check out our podcast. I think we're up to 11 or 12 episodes with different topics with mortgage professionals, real estate professionals, and only experts. So you're going to be hearing from industry professionals that know exactly what they're talking about when it comes to the said topic. Topics such as becoming a loan officer in 2022, utilizing social media to leverage, investing in real estate to leverage and grow your wealth, among many other episodes. So in closing, guys, there's still plenty of day left. I'll be back on tomorrow to give you another mortgage update. Until then, peace out.